Jack, let me start with you, and I want to start with oil, and we can kind of get into what that means for other markets, for the economy. But this is really something else here. I think a lot of people thought maybe we would have found a bottom by this point, but I don't know if there is one in oil. It keeps on going down. What's the significance?
Well, okay, so you're not going to find a bottom until you get rid of all this long liquidation. The hedge fund guys are still very long, so they need to still unwind those positions. But the linkage between oil and the equity market is on the demand side. Global economy is slowing, and now actually I think U.S. is starting to slow as well. So you got a lot of supply, demand's waning, and I got these hedge fund guys that are still long. So.
All right, on that demand question, Scott, do you agree with Jack? Because as I said coming in, this we knew was a supply story, but now there is more and more talk that maybe it is a global economic slowdown story, and maybe we join in with the rest of the world. What's the signal from oil?
You know, I do agree. And in fact, not just a global economic slowdown, but here in the U.S., the thought is that we are producing so much and the production of shale is getting so high right now that that's actually going to eat in to CapEx, that these lower prices now are going to eat into CapEx spending and actually cause somewhat of a slowdown instead of an acceleration in the economy here. So that is now the new concern. And maybe it's not new. Maybe it's been out there for the last, few weeks on this big downdraft here. But that is a major concern. Yes, the supply glut is there, but if we start to turn around now, and this actually has a negative effect, usually lower oil prices, we love it because it puts more money in people's pockets, this, that, and the other. If that eats into CapEx here, look out.
Yeah, Scott, let me follow up with you on that one point about the shale oil drilling that you mentioned, because it's a good point. I mean, these guys have been pumping out oil like crazy with the technological advances they've made the last few years. And you look at places like North Dakota or in West Texas. But if you drop below, say, $50 in oil, you start to get into the 40s. It's going to be a tough proposition for many of those companies to keep doing what they're doing and doing it at a profitable level, because their profit margins get squeezed, and it just doesn't make sense for them to keep pumping out the oil, right?
No question about it, and that therein lies the concern about potential CapEx spending, right? They're not going to just shut the well off, no pun intended, but they are going to start pulling back. So they're at a level now, I don't know, I can't tell you whether it's 50 or 47 or somewhere in this range. They're at a level where these companies now have to make a serious decision about what the future is going to hold and at what price they're going to continue this production.
Yep, I talked to one of them last week, runs one of those companies, said it was mid-40s probably, mid-low 40s, something like that. Used to be 50 in the old days, but he said probably mid to low. But the point is, we're getting close. Jack, on that point, for next year, then, is it past this industry and into other industries where we worry about how much companies are spending? Because that's the future concern. We know things are great now. We're going to talk about retail, by the way, in a minute, and this might be one of the best holiday seasons we've ever seen. Things are great now. What about next year?
Yeah, and you're absolutely right. So obviously markets are forward-looking. As you pointed out, today is good. Consumer confidence is high. But if the trade tensions between the U.S. and China don't resolve themselves, it won't be just CapEx in the energy industry that's getting pulled back. You'll see it in other industries. I ultimately think it kind of comes down to the Fed. I mean, the Fed needs to really manage monetary policy, not on today's economy, but where the economy is going to be 12 months from now. And that's a slower economy without inflation. So they need to do a dovish tightening in December.
So they tighten in December. And when you say dovish tightening, you mean their outlook for next year is to say, hey, we're not going to be as aggressive as some people thought. Jack, maybe you're looking for 2 rate hikes next year instead of 4 or something like that?
Yeah, exactly. What they need to do is tighten, but then give us a message. Somehow quantify. Is it 2? Is it 3? Maybe not even have to be that specific. Just tell us that, hey, maybe some or several rate hikes, and then we're going to pause. I mean, remember, there will be 3 years of tightening next month, and monetary policy has a lag effect. So they need to tell us, from a market participant standpoint, just tell us that, hey, we're going to pause soon.
As a final point, Scott, is there a kind of a bullish case that we're missing here? What could go right? Because there's a lot of negativity kind of coming into markets here the last couple of weeks and into people's outlook for the economy. What could go right that would, quote unquote, get us kind of back on track?
So 2 things, and Jack just hit the number 1 point, and that's really, and I love that description you used, Jack, the dovish tightening here is we need some sort of speak out of the Fed saying, all right, you know what? We are going to digest these numbers and we are going to pull in the reins just a little bit. We're not guaranteeing you 3 or 4 hikes. We're going to see how this goes. That the market would react to very, very positively.
Right.
In addition to that, we need to see these retail sales be the absolute blowout numbers that everybody is expecting. Anything short of that, and that will accelerate the thought process of global slowdown and maybe drive this market down,
no
5-10% further.
No pressure, American consumer. Yeah,
no,
but that's
not at all.
Jack McIntyre and Scott Bauer. I had to fight myself all interview long to not call one of you Jack Bauer and have us in an episode of 24. So thanks a lot, guys. Have a good one.